Monday, August 21st, 2023, Maneco 64, home of alternative economics and contrarian views. We're going to look at the Bank of Japan today and how they're doing a massive amount of QE, a record amount of QE actually, and that's according to Bloomberg. And in my opinion, that's what's keeping the fiat Ponzi, the dollar Ponzi going for a little longer. And I'm going to recommend a book, more to do with history, that has helped me understand what really happens when countries or banks embark in money printing. And of course, it applies to today, not just to Japan, but also to the Fed, the Bank of England, and the ECB. Before I start, I'd like to say I didn't do a live stream last night. We had friends over for lunch, so they were here till late, and we had a very good time. The weather was helpful here in England. It was a nice summer's day. Yeah, Rudy is here, as you can see. He had a really nice time as well. He loves meeting other people. And what about the BRICS? Of course, their summit starts tomorrow. I'm not going to cover the BRICS this morning, but I will have someone on very interesting later on today that I'm going to be interviewing exclusively about what's going on with the BRICS. And I think you will like this guest. He's been on many times, of course, on the channel. So here's the story from Bloomberg, and it came out today actually. And I've been noticing, like in the last week or couple of weeks, because the Bank of Japan tweaked its monetary policy a few weeks ago. They went from a target of 0 to 0.5 in the 10-year yield to a target of 0.5 to 1%. And they said that they would do bond buying or yield curve control if the JGB yield approached 1%. And I've been noticing the movements in the JGB market, just looking at the yields. And I wasn't surprised. And also the weakness in the yen. I thought to myself, and I told you, or I bet you, the Bank of Japan is continuing to do a lot of QE. And lo and behold, this story has come out. So it says, let's go through it, okay? And I'm going to put a link to it below in the description. Yes, there is a paywall for Bloomberg, but I'm going to put it under archive.ph. So if you want, you can read it as well. BOJ's record bond buying is driving need for yield curve tweaks. Notice that they don't say record QE. They say record bond buying because it's all about managing perception, and the BOJ is part of the club, the Fed, ECB, BIS, Bank of England club. So and Bloomberg plays right along with it. They don't say QE, but that's what it is, quantitative easing. Central bank buying more JGBs even with wider yield band. Mushrooming purchases add to reasons for phasing out yield curve control. The Bank of Japan is purchasing government bonds at a record pace this year, a factor that likely prompted its recent move to allow larger yield movements to reduce the strain on its control of longer-term interest rates. Right now, some of you who are new to the channel might be asking, Mario, what does the JGB, the yen, and the BOJ have to do with treasuries and US markets and European markets? Well, it has a lot to do with it. And if you haven't yet, I recommend you look at my playlist about the topic. I've been covering it for years. The Japanese yen carry trade and Abenomics. Basically, what happens here, seeing that Japan has a huge amount of savings. This policy from the Bank of Japan of keeping the weak yen and very low rates or even negative policy rates still drives Japanese savers and investors into the Western market, and it keeps our bonds like elevated. And even with this record QE that they're doing, they're not succeeding in helping the West because our yields are at multi-decade highs right now. So this is a problem. So let's continue. Doubling the effective cap on benchmark yields in December and again last month has yet to significantly reduce the BOJ's bond buying, raising the possibility that more changes will be needed to help rein in purchases. The increase in buying after each policy tweak also raises the question of whether the BOJ moved too slowly in adjusting its settings. Of course it did. Given how aggressively it had to respond to stop investors pushing yields too far. So here's the interesting part. Calculations by Bloomberg indicate that total buying will reach 124.6 trillion yen or $857 billion. That's massive. That's around 17% of Japanese GDP. Unless market pressure relents and the BOJ is able to scale back its operations. Well, I think there are two hopes of that happening. One is no hope, and the other one is Bob hope. The projected figure is up 12% from 2022 and 4.5% up from the previous high in 2016 when the central bank launched yield curve control to make its stimulus more sustainable by reducing the need to buy JGBs. How do they coordinate this, the central bankers? Well, they meet every other month in Basel at the BIS. And you can bet that Jay Powell, Andrew Bailey, and Christine Lagarde talk to their Japanese counterpart. And of course, I'm just speculating, but I could see their dinner talk where they have the best food, the best wine, of course, over there. Being like Jay Powell saying to the Japanese central banker, look, we're going to be doing this. Maybe you can continue to keep doing what you're doing. That will help, that kind of stuff. And that's how it works. Of course, that's just like an exclusive club within the BRICS. And that's why one of the reasons why I think the BRICS countries are trying to rise up and challenge this G7 club. But that's another topic, of course. The central bank has had to intervene in the market twice with unscheduled purchase operations since July 28th, when it made its latest policy adjustment. Total buying in those two forays to slow sharp yield gains totaled 700 billion yen. So there you go. I'm going to stop right here. As I said, I'm going to put a link, as you know, below. You can read the whole thing. And here's a picture of the pace, the projected pace that Bloomberg is seeing of QE, really. They don't call it QE, of course. It's going to be almost $1 trillion. So I'm going to recommend a book which I read probably 20 years ago, the first time. And I've read it a few times over. It's not a long book, as you can see. It's only about 60 pages, but it's Fiat Money Inflation in France, How It Came, What It Brought, and How It Ended, by Andrew Dixon White. And why is this book important? Well, because the French experimented with QE. It wasn't called QE at the time. It was creating or printing assignats and also the mandats as well in the 1790s in revolutionary France, 1790 to around 1796. And of course, France at the time had the problem of debt. it had a problem that the economy was slow. It wasn't picking up. So they decided to do one issue only to get things kick-started. You see, the Keynesian philosophy has been around for hundreds of years. It's nothing new. It's just inflation. And they tried it. And yes, initially after the first QE of assignats, the economy picked up. Things were going great. But then, just like a drug, it loses its potency. And unfortunately, France became hooked to this QE, and they had to keep increasing the dosage and giving more and more doses. And eventually the whole thing imploded, the whole assignats, paper money. And what did they get as a result of that? Well, they got Napoleon, of course, and the first thing he did was pay with specie, which meant he's going to pay with gold and silver. So that's what happens. Am I trying to forecast what's going to happen? We're going to get a new Napoleon? No. All I'm trying to say is that once you go down the path of inflation, and that's why it's so important to understand what inflation is, that it's not just the CPI. Well, it's not the CPI. That's the consequence of inflation. Inflation is the creation of currency and credit out of thin air, just like the BOJ is doing now to buy government bonds. It's a complete Ponzi. They'll never be able to pay this back. And eventually, the general public will realize that, and they will want nothing to do with the Japanese yen. And that's why the Japanese yen is leading the way in terms of sinking against gold. I think last month it got up to 280,000 yen, 1 ounce of gold. Right now it's come back off a bit, but it's still at 275 or thereabouts. And this is going to happen to all the currencies in the West. It's just a matter of time, because we're not any different than Japan. And if anything, it's going to be, probably might even be worse, because at least the Japanese people have a lot of savings. In the West, there is not much of that. So with that, let's quickly look at where the markets are this morning. It's 8:20 a.m. London time. We've got spot gold at 1889. It's virtually unchanged. The low has been 1884.73. The high has been 1895. Silver is trading at 25.80. That's up 6 cents. High's been 89. The low 65. The Dow futures is up 7. NASDAQ 100 futures up 20 points. S&P is up just under 2 points. So market's fairly quiet right now. To the currencies, sterling is unchanged, 127.41. The euro is up about 0.15%, 108.88. The dollar is unchanged versus the yen, 145.36. Dollar is up 0.1% versus the yuan at 713.81. Today I'm going to check the Russian ruble. Some of you have asked me to look into the ruble. So right now, the dollar is up about actually unchanged versus the ruble at 93. And of course, recently the ruble has been dropping quite a bit. And one of the reasons I think the ruble has been dropping is because it's a way for the Russians to inflate. Yes, they haven't got a great system either. Well, they're still under our fiat currency Ponzi system. Am I saying they're going to have a better system with the BRICS? I don't know. But be as it may, yeah, it has weakened a lot in the last 6 to 9 months, the ruble. It's still way below where it went at the outbreak of the troubles in Ukraine, or war, if you want to call it. At that time, the dollar went up to 140. So right now we're at 93.50. So what this does, it helps Russia keep its domestic economy going, I guess, because it's receiving more rubles for the natural resources, oil and gas that it sells, that it can sell to foreign countries. What about the effects? Well, eventually it will lead to higher prices, even maybe of domestic goods, even though they won't be affected as much as I've heard, like if Russians want to go abroad on holiday to Turkey or the Middle East, it's getting more expensive, of course. And if they want to buy foreign electronic goods, yes, that's getting more expensive. So that's what's going on there. Is it a sign of collapse? I don't think so. I mean, we had a very weak currency here in the UK last year. The pound dropped to almost 1-to-1 from around 120 a few months before. So it happens. And yeah, that's where the ruble is then. Let's continue with the currencies. Aussie dollar. Where's the Aussie dollar? Well, that's up. Well, that's unchanged, 64.05. The dollar is down slightly versus the Canadian dollar, 135.37. And the Kiwi dollar is unchanged at 59.16. So let's look at the commodities. We'll start with crude oil. So WTI crude, that's up 0.75% at 81.30. Brent is up 0.75 as well at 85.14. Crude oil remains fairly firm, the price of crude oil. We've got platinum down slightly here, trading around 912. High-grade copper is unchanged at 373.20. Let's finish off with the bond markets, and we're going to start with the U.S. Treasury market. We've got the 10-year yield up about 4 basis points at 4.29. So on Friday, we saw yields drop back to like 4.25 from a high around just above 4.30, which is a key area of resistance. So now it's coming back up a little bit. Overnight, the high's been 4.31. Let's look at the gilt market. The 2-year gilt yield, that's trading at 5.24. It's up about 4 basis points. So fairly steady right now. The 30-year gilt yield is at 4.93, up 5 basis points. So with that, I'm going to wish you all a very good day and a very good start to the week. Take care. Bye.